Let me be honest. When I first moved to the UK, I thought investing was simple. Earn in pounds, save a bit, and park the rest in whatever bank recommended. Maybe a lifetime ISA, some UK funds, or an NRI account back home. But years later, I realized I had been doing it all wrong. Not because I wasn't saving enough, but because I didn't understand properly at the time how the UK investing system works for NRIs. The hidden taxes, the currency traps, and the opportunity cost nobody even talks about. So in today's video, I'm going to talk about UK's investing system for NRIs I wish I knew sooner. A few real lessons that could save you years of trial and error, especially if you're an NRI in the UK. Number 1 is the ISA trap. It's great for locals, no doubt, but not always for NRIs. Everyone in the UK tells you, max out your ISA, it's tax free. And yes, that is true if you are a UK resident forever. But let's say if you plan to move out of the UK or even become an Indian resident temporarily, then ISAs lose their magic. The interest, dividends, capital gains may remain tax-free if you are in the UK, but not necessarily in your destination country or India. In India, for instance, if you become RNOR, that is resident but ordinarily resident again, your global income including your ISA gains becomes taxable here. Plus, you can't contribute to an ISA if you are not a UK resident anymore. Given that I do have plans to move back to India in the near future, that's why I wished I had invested in globally portable investments earlier. Assets that travel with me, not ones that gets locked up by the tax residency rules. So if you are an NRI in the UK, use your ISA allowances smartly for short-term tax sheltering, but don't over-rely them as your retirement plan. Number 2 is hidden cost of holding cash in GBP. Back when I started earning in pounds, I thought keeping money in the UK savings account was safe. But I didn't realize safety and stability are not the same. Inflation was running at 8 to 10% and my bank was hardly paying me anything. My so-called safe cash was losing value every single month. And when you factor in rupee depreciation, where GBP to INR can swing 10 to 15% in a year, you realize how crucial currency diversification becomes. Today I keep a structure. 50% of my core savings in GBP, 20% in INR assets for India-based goals, and 30% in US-based ETFs and stocks as a long-term hedge. This mix gives me both global exposure and currency safety. Because remember, wealth isn't just about growing your money, it's about protecting purchasing power. Number 3, the UK tax system rewards smart structuring, not blind investing. Here is another secret nobody tells you. In the UK, how you hold your investment matters than what you invest in. If you are investing in UK stocks or ETFs through a normal brokerage account, you will face capital gain tax, which could be around 10 to 20% depending on your income bracket, which could be 8.75%, 33.75% or 39.35%. But if you structure your portfolio wisely, say through a stocks and shares ISA while you are still a resident, or pensions wrapper like SIP or SIPP, you can legally reduce or defer a lot of this tax. And if you plan to eventually move your funds back to India, knowing when to sell becomes just as important as what you buy. For example, selling after you have left the UK could make you non-taxable under the UK capital gain tax rule, depending on your residency test, but fully taxable in India. So timing matters more than what NRIs realize. Number 4, don't ignore your India investments, even while in the UK. Many NRIs that I know in the UK, they park their Indian assets and completely forget about them. But if you're serious about building long-term wealth, your India portfolio also deserves the same attention as your UK one. Indian equities over the last 20 years have delivered healthy CAGR of 11 to 13%, far higher than most UK mutual funds. And the best part, you can invest into Indian mutual funds directly using your NRI or NRO account, especially through platforms like Zerodha. If you're interested to open an account with Zerodha, I've left my referral link in the description. Just remember, taxation on these funds differ. I'm not going to cover the current tax slabs around equity or debt funds because that keeps changing all the time. So my advice would be to keep looking out for the latest tax changes around this. So if you plan to retire in India, build and rebalance your Indian assets periodically, not just when you repatriate. Your UK or US portfolio protects your today, while your Indian portfolio protects your tomorrow. Number 5, every pound you earn in the UK has a tax story, so better understand it. This one is a more mindset than math. Unfortunately, in the UK, every pound you earn gets taxed at the source. And every investment you make has a tax story behind it. Dividends from UK companies are taxed differently from US ETFs. Similarly, interest from bonds is taxed differently from gains in crypto or gold ETFs. And if you send money to India, that's not tax-free gifting either. It's treated as a remittance. And you need to keep proof of source if the Indian bank ever asks under the FEMA guidelines. What I wish I knew sooner was that keeping a clean audit trail matters than anything. A simple Excel sheet tracking, date, amount, source, destination, or if you're using remittance services like Wise, then you can get your full transaction history from there as well. This can save you endless stress during tax queries in both countries. Number 6, the secret weapon, global investing tools. When I started investing and trading, I used to rely on YouTube videos and UK blogs to pick funds. But most of them never talked about valuation metrics or real fundamentals. Now, before investing in any global stock or ETF, I use a tool called Investing Pro. It gives me fair value analysis, income stability, and risk indicators. It's got some amazing AI-powered strategies that do all the hard work for you. I've already made a dedicated video on this, so if you want, you can check it out too. That one tool alone has changed the way I evaluate assets. No more guessing, No more FOMO driven investing. You will find my link in the description if you would like to explore it. It's the same tool I personally use for all my NRI portfolios. Moreover, there are some amazing discounts going on for Investing Pro, and if you use my referral link, you are going to get additional 15% off on top of website pricing. Number 7, fire and freedom are different in the UK. One of the biggest mental traps for NRIs in the UK is assuming that saving 1,000 to 1,500 pounds per month will automatically lead to early retirement. But in reality, freedom is not just a number, it's a plan. The UK cost of living has gone massively high. Living here can wipe out your savings faster than compounding can build them. For the exact same reason, I have built an exclusively NRI specific FIRE calculator for you. It lets you simulate both cases side by side, factoring inflation, exchange rates, and your lifestyle needs. You will find the link in the pinned comment and description. Try it once and see how close or far you are from your target financial number. And finally, number 8 is the ultimate secret, dual focus strategy. Here is the mindset shift that changed everything for me. I stopped thinking of myself living in one country and investing in another. Instead, I treat myself as a global investor with dual focus. My UK portfolio gives me stability, income and tax benefits today. On the other hand, my India portfolio gives me growth, currency advantage and emotional security for tomorrow. And what's the bridge between them? Clear documentation, currency hedging and the right investing tools. So that I'm always ready to move capital both ways, both legally and efficiently. Always remember your journey is unique. You're earning in pounds, dreaming in rupees and living in a world that keeps changing every year. So your investing strategy has to evolve with you. Don't fall for a social media hype or oversimplified formula. If you found value in this, check out the NRI FIRE calculator I have left in the description. And if you're into trading and investing and want to explore India or global stocks, then try out Investing Pro. So I hope you enjoyed watching this video. If you did, then please leave your comments and suggestions. And let me know in the comments what all specific topics you want me to cover in this channel. Because the whole purpose of starting this NRI focused channel is to help NRIs like you and me make smarter investing decisions. Until next time, stay smart, stay global and keep investing wisely. This is me Pratik signing off from NRI Wiz, over and out.